Welcome back. This is Jacob Milligan, owner of 9M Investments, and today is the last Friday in May, so that means it's time for Friday Flows. Over the last month, by asset class, fixed income has won the day by far. $68 billion going into ETFs over the last month, $57 billion went into fixed income. Um, Equities over 11 billion. As you can see, most of that came in within the last week. So it's really taken off within the chip sector. The NASDAQ in general overall has gone up, and people are chasing those returns or pushing those returns, depending how you look at it. Over a third of those came in over in the last day. So big move up over the last week or so within kind of the sectors. As you can see, year to date, fixed income, again, very much ahead of the game from equities. And it's actually been, I don't even remember the last year. We've been this far into the year where fixed income has taken in the majority of the game or the flows going into ETF. So kind of a unique situation. Looking at it from a sector standpoint, peer group standpoint, um, corporate high yield has been the lion's share of that big inflows, $39 billion going in over the last month. Fixed income from the government side, broad fixed income, technology again over the last month has risen quite a bit. But again, fixed income has won the day. Looking at it from the over the last week, though, broad equities have taken in the lion's share, but still, even then, fixed income has still taken a good amount, looking at it from a peer group standpoint. And then yesterday, kind of big moves within the tech sector, as you can see, over $1 billion going into the information technology just yesterday. So big moves there. Jumping into the individual ETFs and what has done well over the last week, you can see people were actually it's kind of a little bit of a mixed bag, but in general, people moving back into equities, over almost $9 billion going to SPY. Again, biggest fund that's out there. So the big numbers that can flow in and out of that, not necessarily surprising. But as you can see, the next four names all have bond in the name, whether it be treasury, high yield, ag, the kind of a balanced approach, corporate grade, investment grade corporate bonds. So bonds still very much on the mind, and again, why not with the yields where they are, take advantage of it. Looking at from the downside, where is this coming from? It's always interesting when I see some of these names, because they can be the same names that you see going in on another fund. So from fund to fund, there were some money coming out of yields. Treasury 1 to 3 month. That might tell you that it's somewhat going toward duration. If you look at the 1.7 going into the treasury bond, well, you know what? That's probably coming in from the 1 to 3 months. So people are really extending a duration out within that portfolio. I don't know that I'm going to go 20 plus years, but that's what people are doing so far this past week. Over the last month, a little bit more balanced approach. Again, still a big number over the SPY. As you can see, 8.8 went in last week. Over the last month, there's only 7.1. So again, a lot of that move, or most of that move, was done over the last week. SMH has taken advantage of the rise in some of the big names in the chip sector. Again, people flowing, pushing that name up. Bonds again, treasury bonds, the 20-year, S&P 500, JEPI. Again, that's one of the ones that I use in my portfolio. Been very steady, 2 billion in coming over the last month. Where is it coming from? Short treasuries, value. Interestingly enough, a lot of these other funds kind of short-term corporate, and then you'll see some of these leverage funds, which are always interesting. The moves, the week to week or month to month, on who thinks they're gonna outsmart the market. Looking at year to date, again, Vanguard, S&P 500, the most so far for the year. But a lot of this is tilted toward quality, even if it's not going to be in the bond. If they're going to equities, it seems to be tilted toward quality. Obviously, the S&P 500 names within here, it's typically where people are kind of saying, risk on, if you will. But I'm seeing more movements into the types of funds that are steered toward quality than anything else. Again, from a year standpoint, bond, total market bond, aggregate bond, lots of bonds in the top 12 here that you typically wouldn't have seen over the last really 15 years now if you look at it. Where is it coming from? Coming from ESG, coming from value, short-term corporate. Again, that's actually interesting. Value and the growth. So coming from the Russell 1000, um, any of these leveraged pro shares, the QQQ3. I actually would expected to see QQQ doing well with the run up this year with names in the tech sector, but people have really kind of moved that to the SMH to take advantage, the more focus on the semiconductor side of it. But all very strong names, and it kind of fits on kind of what's going on in the world. Treasuries are higher. You're able to take advantage of that. People are putting their money, where the yield is. Looking at from a return standpoint, because at the end of the day, when we talk about flows, we all want to talk about return. What is that actually returning? And so if you look at it from year to date standpoint, really what's done well is anything with blockchain in the name. Now, whether or not they're invested in actually blockchain is you can dig into each one of these funds and see what companies they own, what they actually own. Uh, the other thing that's kind of interesting within kind of the top 12 of what's done year to date is lots of crypto type funds, but then sugar. You have two different funds that are focused on sugar, and guess what? Sugar did well this year. Now, am I going to go race and to find a fund that kind of gets some access to sugar? No. But it is always interesting when you start looking at a name to name. Are these the types of things you want in a portfolio? Do you want a small piece of something like that in your portfolio? Does agriculture belong in that? So those are names always kind of take a look at and see what you've done. Again, anything that's basically got crypto or minor in the name has done pretty well so far this year. Looking on the downside, what hasn't done well? Natural gas funds haven't done well. There's a few different ones in here, two of them down over 50%. Noble Absolute Return, this is kind of an interesting fund, but it's down over 63% in these global carbon offset strategies. This one in particular is down 75%. There's lots of funds like this that are being released now. It'll be interesting how they kind of price out. And then some of the ones you would probably think that you would see in here, regional banking ETFs, obviously with what we've gone through with the banking crisis so far this year, those funds have been beat up pretty well. And then our good buddy B-Dry, from week to week, you never know if this is going to be up 60% or down 60%. So far in the year, it's down 29%. If you look at shipping costs around the globe have come way down from the kind of thematic times of 21. And this fund hasn't done well because of that. Then good old cannabis fund in here as well. Cannabis ETFs across the way are all down significantly this year. Kind of looking at what has done well. Again, crypto on the year has done really well. Again, that is mostly driven though just by Bitcoin. And so Bitcoin over the last 6 months is up 56%. So if you kind of look at, what has done well, all those strategies, and there's a bunch of different, crypto names out there, obviously, but blockchain is the one that is kind of the basis on all these types of moves. So, as it's moved up, that doesn't really surprise me that these names have moved up with that along the way. So anyway, I hope this is helpful. I hope this is informative. And if you have any questions, please do reach out. I'm here to help.